It's 9:30 in New York City, where Wall Street is reacting to the latest inflation report. Yesterday, the Dow fell over 500 points after CPI data showed higher than expected inflation in January. It was the biggest drop for the Dow since March of 2023. Markets just opened. They are up about just a little under 0.5%. Keep watching it. Meanwhile, real estate experts predict good news for mortgage rates this year. They expect them to drop from their current levels, but not by much, perhaps only by 1%. But is that enough to make it worthwhile for homeowners to refinance their mortgages? To help us answer that question, Jessica Lautz is joining us now. She's the Deputy Chief Economist and Vice President of Research at the National Association of REALTORs. So the question that we have there in the teleprompter is 1% enough for homeowners to refinance? Let me tell you, as somebody who's just about to buy a house, yeah, because it's a lot of money when interest rates drop, especially if you're talking about folks that have jumbo loans.
It is. So if we're talking about a $400,000 home, which is the typical home price in America, just about, what you're looking at is about a $300 savings per month. I think it really depends on that homeowner on how long they plan on living in that home, because there's closing costs often when you do refinance.
I'm glad you sort of brought it down to actual dollars and cents, because I think that's the best way for people to conceptualize the difference that it makes. And if $300 either way isn't going to be a big deal for you, then maybe it's not worth it. But sometimes $300 is a big deal per month.
Yeah,
you know?
But there is a cost in refinancing, right? That does cost some money to do that.
There is, and it's probably different depending on your bank and that sort of thing. So you have to determine whether or not that cost is worth it for you as well. In your research, though, what are the trends that you're noticing when it comes to refinancing?
So rates have actually come down from almost 8% in October of 2023. So there's actually some consumers right now who recently purchased a home in the last couple of months who actually are thinking about refinancing. If you just purchased, you probably are planning on staying in that home for quite a while. In fact, our research shows about 10 to 15 years. So that would make sense in that scenario. But for people who are looking at the market right now, who are trying to time it and saying 6.6 is where rates are right now, maybe they'll go down to low sixes, that's still in the 6% range. So you have to really calculate, does it make sense right now? Or can I get just a little bit of savings? But there could be a bidding war in the future if we look at the spring market.
So with the cost of homes that are still pretty high, does the data suggest that the market needs a reset? And again, as Anne-Marie points out frequently when we talk about real estate, we're in a very unique market here in New York City, New Jersey, Pennsylvania, Connecticut. For the rest of the country, how are prices? I mean, we hear, for example, in New York City that rents are skyrocketing, but prices for homes are still relatively decent. And there are a lot of people who suggest that if interest rates come down, you're going to see prices go up.
So what we actually just saw is that home prices are actually up in 85% of markets around the country. So that's actually quite a bit of home price growth. We do expect that home prices are going to continue going up. Good news for homeowners, but bad for home buyers who are trying to get into the market. We know that home prices are going to continue to go up because inventory is so tight right now. Regardless of what market you're in, there's very low, limited housing inventory right now. We really do need more building, especially at affordable price points.
Wait, can I ask a question and follow up on that? Do we need more building, or is it that homeowners are sitting on the sidelines and not willing to sell their homes at this point in this interest rate environment? Once the interest rate environment is more beneficial, then you're going to start to see more of a supply.
I think it's both things. So we absolutely have a lock-in effect because people actually purchased a home at 2 and 3%, or they refied to that rate. And so now they're very unwilling to move. What we have to remember, though, is that new babies happen, marriages happen, divorces happen, new jobs, and that will cause people to move. But at the same time, we have been underbuilding in the U.S. for over a decade. We really do need more home building, especially when we look at affordable properties. So not just McMansions.
Yeah, we had a shortage before the pandemic, and then the pandemic brought building down to a grinding halt, and the price of wood skyrocketed. So then there was nothing happening. So we got to catch up from even before the pandemic, but you know, the pandemic had an incredible impact on many, many industries, certainly housing. Jessica, it's great talking to you. Thank you very much.
Thank you.